obviously we are impacted by the low oil price environment, and we've seen a 45% reduction in oil price in US dollar compared to the previous quarter last year. What we can do is mainly to focus on the operational performance, and we have done that. We have delivered a very strong production growth of 4%, and underlying 7% actually production growth if we adjust for sales transactions, and also secure stable operations. And then we also have a comprehensive improvement program that is ongoing, and we have seen some significant impacts from that into our cost base and into our operational performance in general this quarter.
The refining sector year-on-year was much stronger, but quarter-on-quarter was not nearly as strong as the street was expecting, hence what the big miss. The upstream, the production side of BP was also weaker. We were expecting that because even if oil prices in the second quarter were a bit higher than the first one, BP has a lot of maintenance, particularly in the Gulf of Mexico. That's a very high profile and high value barrels that they were missing because they were doing maintenance. So we were expecting that, but certainly the refining sector has been a lot weaker.
There's other factors affecting Russia, but they're a big oil producer and their GDP is going to be significantly down this year. Brazil is also quite a big commodity producer. Its GDP is going to be down this year. Canada has had some quite significant downgrades, is now expected to grow 1.5% instead of like 2.5%, which it's been doing over the recovery. So we shouldn't expect to see no effects from the oil price fall, but we have to look at the other side of the equation as well. And I think the big story, perhaps for the next couple of years, is there are a number of factors that could be quite favourable for the Western economies, with perhaps Europe coming out of the doldrums a bit.
The drop in prices that we've seen in the last few days, in the last few weeks, really going to take Iran. It's going to allow for Iran to come into the market because it will basically limit U.S. production next year. But I think if we don't have Chinese demand, then we're going to have a real problem. Because, effectively the market's oversupplied. We have very high inventory levels. And as long as prices are low and Chinese demand is good, we're going to be in this range. Like I said, but if we don't have the demand, then the price will actually probably slide even lower.